Let's get some facts. 37% of you aren't subscribed to this channel. That's almost 4 out of 10 just freeloading the alpha. So come on, hit subscribe and I promise to keep leveling up the show with the best guests and the juiciest insight. Go on, do it now.
Hi everyone, we are on the ground here at the Solana Breakpoint conference in Abu Dhabi, and today we are joined by Matt Hougan, Chief Investment Officer at Bitwise. Matt, thank you so much for joining us. How are you doing today?
I'm doing great. Thanks for having me. It's exciting to be here.
Yeah, absolutely. The conference is live. You know, we're just getting started. It's day one. What are you expecting from this conference?
Well, I mean, I should just say the energy of the conference is absolutely amazing. It's important to note Solana's not that big from a market cap perspective. I keep thinking about this. It's like, it's like a $70 billion protocol right now. That's like a small company in traditional form, but there are thousands of people here filling an arena. I expect to hear a lot of talk about stablecoins, tokenization, rebirth of DeFi, maybe some new things. So far, tokenization has been the biggest theme just walking around.
Right. Yeah. No, I love that perspective that you put it in. It's, in this crypto world, we kind of get lost, but that 70 billion market cap perspective is just very fascinating to think about. So, with that in mind, I want to kind of ask you, what are your expectations for crypto in 2026 and beyond?
I think it's going to be a massive year for crypto, actually. I know crypto Twitter is a little bit down on its heels, a little bit depressed, but from my seat, speaking with institutions, speaking with regulators, there's been two massive changes. We're now on a relatively firm regulatory footing, and the level of institutional interest and investment is enormous and accelerating. I think there's too much buying coming from institutional investors for the price to stay down in 2026. So I expect it to be a breakout year for crypto.
Absolutely. Well, we're definitely excited for that. I want to touch on that because crypto Twitter has that very bearish sentiment. And, just for, the average person that's in crypto, it's very easy to get caught up in that. So what do you think are some catalysts that we can look to kind of turn that tide or turn that vibe, that negative vibe that crypto Twitter seems to have right now?
Yeah, well, I think there are two things that end at the end of this year, actually. So I think turning the page, ringing in the new year of 2026 is going to be one of those catalysts. Those two things are, I think a lot of people have been selling this year, trying to get ahead of the 4-year cycle, right? According to the 4-year cycle, 2026 should be a down year. I think you saw a lot of OGs selling in 2025, trying to front run that. By the time we get to January 1st, that's over. You can't front run something that's already here. So that selling, I think, will dissipate. The other thing was the October 10th liquidity washout, the big leverage blowout. I think people have been worried that there have been companies that will sort of come to the surface as having failed. If that's going to happen, that will happen before year end. They won't want that to spill over into the new year. So I think the two big forces that have been sort of weighing on crypto will be washed away, and left instead will be this bullish force of institutional adoption, of regulatory progress. And I think that'll just push things up. In terms of what could catalyze the big, dramatic run up, I think it's if we get passage of the market structure legislation in Congress. I think if that happens, it's all clear. Solana's going to new all-time highs. ETH's going to new all-time highs. Bitcoin's going to new all-time highs. I think we're off to the races.
Now, you said if that happens. How confident are you that it will happen? And I guess in what type of time frame do you, if that does happen, what kind of time frame do you expect that to?
Yeah, not that confident, actually. Unfortunately, I wish I were confident. I think it's something like 60-40 or 70-30 that it will happen. You are seeing real engagement from Democrats and Republicans hammering out issues, right? There's recently been a big Democratic piece that sort of lays out the remaining issues. It's framed relatively optimistically. I do think both sides, or rather, neither side wants to go into the midterms having just blocked crypto, right? We learned in the last election that the crypto electorate is large, strong, and numerous. I don't think they want to have that on their resume. So I'm optimistic we'll get there, but it's not 100%. And if we do, it'll be Q1 or early Q2. If it doesn't happen by then, it's not going to happen because people will be in campaigning season. So early Q1 or early Q2. And again, if it does happen, I think it's straight up. I think it's an enormous bull run.
Yeah, absolutely. I think we saw that, right, with the last election. It was just record breaking for crypto. I think over 240 pro-crypto candidates were elected. Now, another thing that you talked about was the institutional side of things and how they're just buying at, enormous rates. Why is the price still down? If with so much bullish things are happening, ETFs are being launched left and right, institutions are buying it up, but why haven't we seen that in the price just yet?
Yeah, I'll actually make an analogy for you. A lot of people have been pointing to the fact that gold has gone skyrocketing this year, right? Why has gold gone skyrocketing? It's because of central bank buying. But here's the thing that people don't talk about. The central bank started buying gold in 2022. They bought 1,000 tons in 2022, 1,000 in 23, 1,000 in 24, 1,000 more this year. But the price only really ramped this year. The reason was whenever you have more demand than supply, you have to exhaust the other people who are willing to sell. Since the ETFs launched, there has been more demand than supply for Bitcoin, for Ethereum, and for Solana. The ETFs are overwhelming the new supply, but you have to work through this process of OG holders who are willing to sell. Once those clear, then you'll see the kind of spike move that we saw in gold. We think that could happen in 2026 for Bitcoin and indeed for some of these other assets because that demand is persistent. It's more than new supply. And eventually the sellers will exhaust themselves and we'll be off to the races.
Yeah. Looking forward to that, right? So now speaking of, ETFs and other assets, Bitwise just launched a Solana ETF. Can you tell us a little bit about that?
Yeah, we're really excited about BSOL. It's had tremendous inflows since it launched. It's like pointing towards getting $1 billion in inflows. The beauty of that ETF is it owns Solana and it stakes 100% of it. So not only do you get the price return of Solana, but you get what right now is something like a 7% staking yield on top of it, all for a fee of 20 basis points. I think what you're seeing right now is crypto issuers are looking through the list of the top 10, maybe top 15 crypto assets, and they're launching each new asset. You've seen strong response on Bitcoin, on Ethereum, really overwhelming response on Solana. I think Solana might be particularly attractive to a certain set of institutional investors. That's why the flows have been so strong. But you've seen strong response from XRP, and there'll be a few others in the new year that I think will do quite well too.
Now, speaking of Solana being attractive, why, from Bitwise's perspective, why did you guys decide to do a Solana ETF, and what is so special about Solana?
The beautiful thing about Solana is that when you buy it, you're making two bets at once, and they're both really good bets. So one bet you're making is that stablecoins and tokenization will be more important in the future than they are today. Everyone thinks that's going to happen, right? The chair of the SEC went on Fox News the other day and said all U.S. assets will be tokenized and trading on blockchain rails in a couple of years. That's $68 trillion moving through blockchains like Ethereum and Solana. So betting that stablecoins and tokenization will do well is a pretty good bet. The other bet you're making is that Solana will gain market share versus its competitors. It's been doing that for the last year and a half. It has a strong technical footprint. It's in a better regulatory position. I think that's a good bet as well. The wonderful thing is if you get both of these bets to work, they multiply. It's not 1 + 1 = 2. It's 2 × 2 = 4. And you can get this enormous run up, right? You could see there are worlds in which Solana 10x's from here. Right? If Ethereum 2x's, it's like $1 trillion asset. If Solana catches up to that, it's $1 trillion asset. That's like more than a 10x return. And so it's just a really attractive investment because it's so small relative to the scale of what it's going after. It's going after $1 trillion market cap. It's less than $100 billion. There aren't that many things you can say that about. You can say that about Solana.
Absolutely. And, just as someone who uses Solana, pretty much every day, I want to ask you, how do you think the retail investor kind of fits into all of this? And what do you think they look for, when they're, whether they're investing in crypto or whether they want to use crypto? What do you think that retail investor looks for?
Yeah, it's a great question. I mean, one, there is this element of invest in what you know. And there are a lot of people who use Solana. I mean, its UX is really remarkable. It has strong penetration into the retail use case. I think people who have used Solana-based applications know how good and easy it is to use. And they are definitely investing into BSOL, into our Solana ETF. Any the crypto is a market that everyone can own. I mean, that's sort of the beautiful thing about it, right? The Harvard endowment can own crypto exposure, and so can my father. And in fact, they can do it through the same ETFs. So I think we're going to see strong retail adoption and strong institutional adoption. Again, particularly for retail, they like that challenger story, right? They like to look at the landscape of layer ones and find the one that they think is the most appealing, that they can argue for, but the market hasn't fully recognized its potential. I think you could make a good argument that Solana fits that description.
Right. And now we're always talking about, moving Web 2 to Web 3, putting things on blockchain rails. What do you think needs to happen for us to actually get to that process?
Yeah, it's really two things. One, regulation. I know that crypto natives are resistant to regulation, but most of the money and most of the people want some level of regulatory certainty before they're willing to move their real world assets into this on-chain world. So things like the market structure bill would be a big deal. The second, which has gotten a lot better and where Solana is really a leader, is UX. UX in crypto, user experience, is still not perfect. I mean, as someone who uses it regularly, I think you would probably agree. We need to have that continually dialed up. If we get a strong regulatory footing and we get real UX, I think you're going to see enormous growth. I'll add one more catalyst that I think very few people talk about. Under the previous SEC administration, if you were an entrepreneur and you wanted to build something cool, you would look at crypto and say, if I do it there, there's a good chance I'm going to go to jail. Right? That's not a good look. And I think it kept a lot of smart people out of this space. I do think we're really early in what's going to be sort of a Cambrian explosion of amazing new applications, because all of a sudden we have this great technology that can move money at the speed of light, that can be programmed like a computer. And now entrepreneurs feel safe building in it. And I think that's something that will pay off over the next 3 to 5 years. And I don't see many people talking about that, but I think you're going to see some really exciting things bubble out of that fact.
Yeah, now I want to stick on that point, because do you think it's just a matter of just the new administration coming in and they're, pro crypto, or was it just the SEC chair kind of holding us back? What do you think, was that change from, 4 years ago to where we are today?
Yeah, I mean, certainly it was broader than just the SEC chair, because you saw it at the SEC, at the CFTC, parts of the CFTC, at the OCC, at other three-letter administrations, right? A sitting senator had an anti-crypto army. I mean, it was pretty explicitly against this technology. And now we have a more reasonable approach. We saw, again, crypto won the election, hundreds of pro-crypto congressmen enacted, and now everyone is building in this space. The other important thing that happened is Wall Street decided it wanted to build in crypto as well. A lot of people wonder, will we reverse this regulatory progress? I don't think so, when BlackRock's biggest fund by revenue is a crypto product, when Citi and Goldman Sachs and JP Morgan have crypto and blockchain divisions. So the other big change is that Wall Street became comfortable and decided they wanted in. It wasn't just a disruptor, it's also a profit opportunity. I think those things together have really changed the landscape in a permanent way for crypto.
Yeah, that's just such a powerful way to kind of look at it, right? Now, I want to ask you, I often hear, one of the things about crypto we often hear is in the ethos of crypto is being anonymous, right?
Yep.
And then another thing we talk about is speed and how cheap it is. What do institutions care about when they're looking at crypto? Is being anonymous really important, or is it more like the speed and kind of how cheap transactions are and how the ecosystem is to use?
Yeah, I think it's speed and cheapness, and the new things that you can do with it. One thing that they're probably thinking about, which maybe crypto doesn't think about enough, is that when you make something really low cost and you make something really fast, people do much more of it. If you think about the early days of texting, it cost 30 cents to send a text and very few people could get it. No one texted. It became free. Everyone did it. If you think of even stock trading, it used to be that it cost $200 to trade a stock. Then it was $19. Then it was $6 and $2. Now it's free. And the level of transaction activity went to the moon. So I think from a traditional firm, they're looking at something like stablecoins and tokenization and saying it's much cheaper, it's much faster, it's global, it's 24/7, 365. These markets that are a certain size today are probably actually going to be 10 times bigger. The payments market is going to be 10 times bigger. The trading market is going to be 10 times bigger. And that's what they care about. They don't care about the libertarian ideals. They don't care about the pseudo-anonymity. I can't say it either. The fact that you don't know, a little bit of privacy, they don't care about that. But they do care about the potential of these markets, which are global in scale and will grow, I think, 10x plus once we make them cheap, fast, and always on.
Right. Now, I think for a lot of, especially people in the US, it's very easy to fall into that trap of thinking of just crypto in terms of the US. But globally, where do you see crypto, I guess, having the biggest impact, whether that's maybe in the US or outside? Where do you see kind of that next, I guess, frontier?
Yeah, look, they say about disruptive technologies that they have to be 10 times better than the existing system in order to catch hold. If they're just 2 times better, people are too slow to change. And I think that's something that people in the US sort of stumble on when they look at crypto. They're like, yeah, stablecoins are a little faster, but I like my credit cards and my airline points. The reason I raised that is I think the first places that crypto will really catch on, the first places that stablecoins and tokenization will catch on, are markets that are poorly served by the existing financial infrastructure. So stablecoins as a savings tool in markets with high inflation, stablecoin payments as a B2B tool in markets where there's a lot of friction, tokenization in places where you can't easily access U.S. capital markets, tokenized stocks, making them available globally. Those are the places where it will catch hold before, my uncle is trading tokenized stocks in his Schwab account. I think that'll happen, but I think it'll happen first in these other markets that are underserved.
Right. No. I often think of it in terms of the stable coins. I often think of it emerging markets, it's access to the dollar, and in, more developed markets, it's kind of like finance kind of 3.0, if you will.
Totally. But it's also just that the market is so huge. One thing that I've felt being here in Abu Dhabi, I've met with multiple billion-dollar investors who are now thinking about crypto aggressively. It's not just here in Abu Dhabi, of course. It's in every part of the world. I do think in the US, we may underestimate the size of this market because we think about our 300 million people and forget that the world's 8 billion people, and they're all being wired together with this new global financial infrastructure, which is not something we've ever had before. We've had regionalized financial infrastructures, and now we have a global financial infrastructure. It's a big change.
When you say that, I just don't understand how crypto Twitter can be so bearish. They just need to zoom out and kind of, just realize that.
They do need to zoom out. I mean, it's worth noting that the fear and greed index is at like 10 all-time lows, and the price is flat for this year. So I do think they're unnecessarily bearish. If they broaden out, this industry still has multiple 10x's to go from here.
Very exciting. This conference, you feel the energy, you see all the people walking around. I want to, before I let you go here, I want to, leave it to you for the last word. What do you want people to take away from this conversation? And, I guess from Breakpoint in general?
Yeah. I mean, the big thing is that, look, crypto is on a 20-year journey. And that journey will have big ups and downs. And the people who get hurt are the people who panic either at the top or the bottom. They chase returns up or they panic at the bottom. If you're investing in crypto, if you're investing in this new global financial infrastructure that's 24/7, faster, cheaper, better, that's going to play out over the next 10 years. And I would align sort of your investing strategy with that kind of time frame. In terms of this conference, it's just spectacular to me meeting the caliber of people who are walking around here. I've just met people who were running fixed income effectively for PIMCO, now exclusively focused on tokenization. And that story is going to repeat 100 times while I'm here for the day. It just makes me very optimistic about where we're going. I wish everyone could sort of experience both the excitement and the caliber of conversations that are happening here at Breakpoint.
Yeah, and I think they will. Matt, it's been a pleasure having you. Thank you so much for joining us and, imparting some wisdom and, some bullish vibes on us. So
that's right. Keep the bullish vibes going. It was great to be here.
Thank you.
So you obviously like this video enough that you've got to the end. That's quite a big task. But listen, do me a favor, hit the like and subscribe button and also check out what video's next because I think you'll love it. But if you want even more, and when I'm talking more, I'm talking about member generated ideas, incredible alpha, research, everything there to help you in your journey, just head to realvision.com/join for the best financial intelligence out there and the pure alpha that's within the platform.